Customer Care Associate and Managing Director Stop here to talk a little bit about their earnings. Thanks for joining in. It's been a little bit of an okay quarter for you. Numbers have been fairly flat and there's been a loss, more importantly, which investors are a bit disconcerted by. Can you tell us what really are the factors at play?
There are two parts to the numbers. One is the operational number and then there is the exceptional impact that we have taken. On operational numbers, while the top line hasn't really grown, fundamentally because of two parts. One is we decided this time to reduce our sale period by 10 days, which is a big impact definitely, but we felt that in the long run, we must reduce the sale period because it does impact not only customers but also the overall profitability. Number two, in some of our biggest stores, we have seen big impact either because of metro renovation going on or mall renovation going on or a mall closure. So for example, in Mumbai, Malad, one of our biggest store in Inorbit Mall is getting impacted because of metro work that's going on. Malleshwaram, Bangalore was shut for about 45 days. The whole mall was shut for 45 days. And we are also seeing similar impact in Calcutta, where again one of our biggest store is undergoing renovation because the mall is undertaken renovation. So top line definitely impacted because of these factors, both on sale account as well as external factors. But in spite of that, our operating expenses are actually down by 50 basis points. So on operational numbers, if you look at it, the number EBITDA is up by about 2% and actually PAT is also up by almost 15-16%. We have taken two exceptional items this time. One is impairment on account of Hypercity for about 36 crores and impairment, again provision of impairment for about 11.8 crores on account of the NGIPL, which is the nuance duty free. That's why what you are seeing is the 47.8 crore impact of provisions impacting the bottom line. But these are one-offs and won't be recurring at all.
Hi Govind, this is Nayantara joining you in the New Delhi studio. You know, it is a thumbs down from the stock markets when it comes to your fourth quarter report card. The stock is down over 3.5% in trade. And here's something else that probably has investors worried. Shoppers Stop's only opened one store in the entire quarter. Why? What's your expansion plan going forward? What kind of capex is it that you're considering? You just spoke about mall closures, renovation, etc. But just one new store, is it also thanks to e-commerce that you're having to, delay opening of stores?
For the next full financial year, we are looking at 5 store openings in the department store, another 5 in the mixed retail format, which is specialty retail format, and even in Hypercity we are looking at 1 store opening. So overall more than 11-12 store openings during the coming financial year. Approximately total capex on opening as well as renovation and other infrastructure, we are looking at about 100 crore investment.
Okay, so 5 new stores will be open in the new financial year. And Govind, while there were several operational and exceptional factors that led to the loss declared by Shoppers Stop, can you tell us what caused the loss in Hypercity in the fourth quarter? You've also reported a one-time exceptional cost there. Some details on that front. What exactly is it for?
So Hypercity, I would say good news there, because if you look at our results first half versus second half, first half we were running at almost flat like-to-like growth. Second half we are recorded almost a 8.5% like-to-like growth. So very good traction in terms of getting back like-to-like growth, number one. Number two, fashion has grown very well substantially. In fact, fashion share now at 16.5%, growing again at double digit, which also drives the profitability of that format. This quarter, we also gone ahead and invested a lot in our infrastructure, people and marketing, because we felt that we needed to drive the top line as well as the brand much stronger than what we had done in the past. So we believe that these are investments that will help us in the coming year for sure. And yes, this year we should start seeing the EBITDA losses start coming down and our movement towards company EBITDA positive being happening by quarter 4 of this financial year.